Could it be possible? A 51% decline in GDP? Well, that's what the Fed is suggesting right now. Ultimately, we don't know what the real stats will be, but we know that it isn't as great as we're led to believe. Salaries are cut, but the media spins this as fewer layoffs. Millions unemployed, not a big deal because it could have been more. It's all illogical, but with so many different factors distracting the public, they won't know the truth. And that's why you came here for the truth, so let me unveil that for you. Today we're going to talk about numerous issues. I want to cover everything. I want to look at what the Federal Reserve is doing. I want to show you what's going on in the economy. We're going to look at how this affects you as the individual. Let's begin. This is really interesting. You can see it's from Citi, and I think that they've pointed out something that I haven't shown you in a little while. And in this particular chart, I know it is a little small. This is the maximum. It will zoom in. Equities rally despite outflows. And I have shown you this many times before, but we're looking at the EPFR, and it is important to see the data that they are constantly giving out, and we can track the flows. The flows give us the idea of where money is going to and from, and in this case here, this blue line shows us that it has been on a decline. On a month-to-month basis, of course, we're going to see it fluctuate, but isn't it interesting that money is still flowing out? This wouldn't actually be the case when you look at how much the stock market has moved up and you try to correlate the two. This is very different. On the right-hand side, panic euphoria back in euphoria in this scale that they show us. Here it is moving up and down all of the time, a lot of volatility of course, but right now here you could see that they have moved into the state of euphoria, and that is clearly evident particularly when you look at retail investors, for example. I'm going to show you the data from the Federal Reserve Atlanta as well as the nowcast New York Fed. This just shows us that they are expecting a 51.2% plunge in GDP. The chart down here corresponds to that. And I just want to give you this information as consistently as possible. We track this, although ultimately it doesn't matter. What's more important is what I'll show you in a second, but I give you these directly from the source. This is the Federal Reserve. This isn't me saying this. This isn't CNBC saying it. It's coming directly from the Federal Reserve. This is just one of them. I'll show you another. Here we have the Federal Reserve out of New York showing us the data coming from what they call the nowcast model, and this is just plunging along with all of the other data sets, the indicators that I have been showing you here. I'm sure you've been seeing them on your own. Right now they are forecasting minus 35.53% based on the information that's available right now. That isn't going to show us, of course, what's going to happen tomorrow. That isn't really what we're looking at. In this case here, based on the available data, this is what we have, minus 35.53 coming again from the Federal Reserve. Speaking of the Federal Reserve, Fed bazooka to fade in the coming months. Bank of America believes that this is going to decline, that the balance sheet is not going to grow at the rate it once did, and then it will move into the negative going towards 2022. I'm not so sure of that, of course, but we'll see. If this is anything like what we saw back in 2018, as they said, they're going to reduce the balance sheet and everything's going to be a-okay because it's scheduled, because it is predictable, and the market didn't like that. We know this to be the case. Well, I just wanted to show you this here. I think it's important to see what the Federal Reserve is doing on all levels, and this just gives us an idea of where they believe, at least in these particular instances, they believe where this is all moving to. I'm not sure that they're going to be able to reduce their balance sheet at all, number one, as well as the fact that they think that they can actually slow down the pace. And of course, they have slowed down their purchases right now, but it's still at a level that is extremely high. I believe on a daily basis, they're buying $4.5 billion worth of treasuries, as opposed to what they were doing just a little while ago. It was at $125 billion per day in what they were purchasing. It's crazy, but this is where we're at. When you add on the mortgage-backed securities, when you add on the corporate programs that they're doing now, buying ETFs and so on, it's unimaginable. I really don't think that they're going to be able to get to a point where they can let off the gas enough and the market comes and picks up the pieces. Here you can see from Bank of America, private clients have been selling the SPX 3000, and this just shows us the flows that have been going on. Like I said, it's interesting to say the least, because if you look at what's going on in the market, it's been going up and up and up as the retail investors have been buying in. But the outflows are clearly evident here, as well as looking at the data from the EPFR. On the right-hand side, they're buying gold. And this is gold in the paper form, but at least it shows you where the mentality is at. They do not believe in the strength of the current system, and so we've seen the rise in gold because it's considered to be a safe haven. When you look at the ETFs, I think it's very, very different from the physical completely and entirely, but I'm just trying to show you the investor mentality and what's been happening. Powell says the Fed is days away from making the first loans in the Main Street lending facility. It's interesting to see the way that the Federal Reserve has been responding to all of this. They have been going into every single sector. They've been doing everything, including buying stocks and more specifically ETFs. But when you look at it, the way that they've been responding has been not criticized by the Congress as they would have been during the last crisis, as they were doing in the last crisis. No. This time around, they're being celebrated, they're being cheered on, and certainly things have really changed in a relatively short period of time. This was an interview that was done with Powell just recently, and I wanted to show you this quote. "We have crossed a lot of red lines that had not been crossed before. I'm very confident that this is the situation where you would do that and then figure it out later." This is the way that they talk about it all the time. We needed to respond. We needed to act quickly. I know this was not the way that it should have been done, but hey, we're going to get things right. We're going to make it right. We're going to fix it. It's going to be resolved. So you just have to trust us. But what happened during the last bull market? They had 11 years to figure out the recovery and they never got around to it. Why? Because everything gets swept under the rug. Everything gets buried, and unfortunately, time and time again, the average person, the bottom 99%, or you could look at it the bottom 50% or hit the hardest, they don't ever see any of the benefits of all of this different activity. It doesn't work like that. It never has, and of course it never will. Okay, so this is interesting. It's something I've been talking about for a little while. We have seen many businesses that have struggled. Of course, they've got some serious issues. Maybe they're paying rent, maybe they've got employees, they've got inventory. There's all kinds of different conditions that are at play depending on the sector, depending on the location, and so on. This is a survey that was done, and with any of these surveys, you're always getting a limited set of data, as you know, but I think it's interesting to cover them, and then we piece them together, because it's not just one survey we take information from. If we take them from 5 or 10 and so on, and we start to piece that all together, things make a lot of sense. The results of the survey, conducted by financial services company Aslo, compiled responses from small business owners regarding the situation in 2020 and their economic impacts. Of those surveyed, 47% said that they anticipate shutting down, and 41% said they are looking for full-time work elsewhere. Now that really hits home. That is truly unfortunate. Nearly half of the business owners are going to have to shut down. That number is probably a little bit elevated, there's no doubt about that, but it is a lot of these particular businesses that won't be able to open up. There's no way. As I've suggested in previous videos, when you look at what we have seen, so many of them are unable to go through the Chapter 11 bankruptcy because that means they have to open up to liquidate their inventory. This goes for big and small corporations. These companies, of course, as I've said before, are employing a lot of people, and unfortunately they don't even really have to feel that yet, but they will in short order. Hertz bankruptcy and a distressed rental car market means more pain for U.S. automakers. This isn't good on many levels because you've got investors in here, you've got the companies that are affected, directly connected to Hertz, of course. There are so many automakers that really supply a lot of these cars and a lot of the jobs that are interconnected with that. And if a company like this is going to start laying people off, if they're going to reduce the size of their business, this will have an economic impact. That's what this is all coming down to. The average person and how this deals and how that person deals with everything that's coming to light. Now, we're going to see another round of bailouts for people. Maybe they'll get that $1,200 paycheck. Okay, that's great. But how long does that $1,200 last? It's not going to last forever. We know that already. So this happens to be just one of those companies. And you could look at this and say, well, Hertz is a bad company, or this company there, they should go bankrupt. But they don't understand how the ripple effect really happens. And this is really key to understand. If you just take the time, look at it, it is quite logical when you think about it. When you see so many of these different businesses that have been hit very hard because of all of this. U.S. savings rate hits a record 33% as this current issue in 2020 causes Americans to stockpile cash and curb spending. Essentially what we have right now is uncertainty, and that uncertainty is making people kind of hold back. Well, I don't know if my business is going to be able to stay around in the coming months, so I'm just going to hang off on that spending, the discretionary spending, which would have been totally normal last year. Maybe we would have went on that vacation, maybe we would have done this upgrade, maybe we would have been buying this or that, but today that's not the case. There is tremendous uncertainty and the fear that is lingering, and that is restraining people's desire to go out and spend as they normally would. Of course, many of the stores are closed, so they can't even spend if they wanted to, and that has really put a big dent into the economy. With the U.S. consumer accounting for more than 2/3 of the economy, the economic recovery depends on whether the increase in savings is a result of the shutdowns or structural changes in consumer habits. That's the key one we need to be watching out for in the coming months. This is the chart that corresponds to that, and you could see it is historically, the chart goes back to 1960. It's an anomaly. There's no doubt about it. We keep hearing about the pay cuts coming at the top. The top of the companies are going to get cut, don't worry about it. But in this case here, it doesn't seem like that's the case. Unlike executives at NBC Universal, Fox Corp, and ABC parent company Disney, top executives at Viacom CBS have not taken reduced salaries amid the financial challenges, though the company's management ranks have been thinned out in connection with its recent merger. So they talk about the details here. If you want to read it for yourself, you can. But essentially, not every company is going to go ahead with what they plan. In some cases, that's a good thing. Other cases, not so good. But you've seen many different corporations both lay people off and cut salaries. But if you look at this on a deeper level, you know the way this works. The people at the top, they get what they want. How many different companies have gone through bankruptcy and they have given bonuses to the executives? I just showed you examples in the last few days. We need to realize what's really going on here. That's all for this video. If you found it informative, give me that thumbs up button. It really helps to support me, so thank you very much. If you want to check me out on Instagram or Twitter, you can do so at The Money GPS. If you want to learn how to sell online, you can do so at my free, 100% free e-course, the AmazonGPS.com. Do you want to understand the financial system? I know it's complex and convoluted, but these two books will explain everything very simply, but in detail. Check them out at the link in the description if you want the audiobook, themoneygps.com. Hey now, don't go anywhere. You've got to watch this video. It's really important. Not enough people have seen it. Click on it. I'll see you there.